okay?
Yeah, that's all clear.
Okay, cool. I'm about to record this webinar. Mark, you're the only one on the line today. How many do we have registered? I thought we had like 12 or 13 registered.
Yeah, that's what Sue said.
Yeah. But we'll...
Well, I don't think you need me to monitor the chat box.
Ask as many questions as you want to, Mark. But we do actually, 50% of the people registered actually either listen to the recording, listen to the podcast, Brent. Is that right? Sometimes?
I'm not sure about the podcast as much yet, but definitely like the YouTube, like we put it up on YouTube, and the number of visits we get on that definitely is a large amount. And a lot of people give me that feedback that if they can't make it, they'll they know they get the recording sent to them after it as well. So
yeah, and we'll send the recording out as well. So very good. I'll just share my screen and then we'll kick off. So today was all about COVID recovery. So JobKeeper is due to end on the 31st of March. And from there, so you will claim your last JobKeeper payment in April. Most people claim it by the 14th of April, although the ATO allow you to claim up until the end of April for the JobKeeper for the previous month. But the reason for this webinar is that we are seeing the government stimulus packages really start to tail off, as far as there's no more cash flow boost. That stopped at the end of September into your September BAS, which was paid out in October. JobKeeper's finishing. There's a couple of other stimulus payments. The government guarantee on loans is finishing soon as well, which I'll go through in a minute. But they're the sort of things that are really starting to slow down. And it's really about preparing your business for post-JobKeeper, post-COVID, and how it's going to look going forward. I'm in Brisbane today. I've been to a seminar which is purely about recovery post-COVID. I listened to an economist from the Commonwealth Bank, and I also heard stories from a tax practitioner and also from an insolvency practitioner about what it's going to look like essentially going forward from the 1st of April. And there's a lot of expectation that there is going to be an increase in unemployment and also an increase in not just insolvencies, but an increase in struggles amongst businesses, especially those in the tourism industry, those that have been living off JobKeeper for a bit, in whatever industry that might be, that they're not going to be able to continue on anymore. We're in central Queensland. We're very lucky. I saw a slide today which said that we're the second best performing region in the country at the moment. Mackay's also doing very well at the moment also. So we're immune to a lot of the things that other regions in Australia are going to be seeing in the next bit of a while. Cairns and the Gold Coast, I saw were the most reliant on JobKeeper, and they're going to really see the pinch coming up from here onwards. I saw a stat, it was something like 12,000 or 13,000 jobs are predicted to be lost simply by the shutting down of JobKeeper and people moving on to, it was JobSeeker, but essentially Centrelink from here onwards. So without further ado, I'll get into my presentation that we've prepared. Just share the screen. Can you see that okay, Brent? Mark?
Yeah, no, I've got it there. It's fine. That's up.
Yeah,
Cool.
excellent.
So essentially, we started this webinar series, Brent, 12 months ago next week when JobKeeper was announced, and Canars saw a real need to get a lot of information out to our clients quickly about JobKeeper, JobSeeker, and the other grants that were available. And so every month from then onwards, we've been doing webinars essentially that are allowing clients to get a bit of education about how these stimulus packages work. And today is really just a wrap up of where we've come from and what we see happening from here onwards. So we had JobKeeper, JobSeeker. We had the COVID-19 grants, which was the $10,000 from the state government, as well as the $250,000 small business loans that the state government put out, as well as the federal government funded, the federal government, they guaranteed loans at 4.5% for a number of years as well, without having to get security. We now have JobMaker, which we did in a previous webinar. So we're able to start claiming JobMaker credits from the 1st of February. which is essentially, in a nutshell, for people that were unemployed for a month out of the previous 3 months up to the age of 35, you're able to get a certain amount of credit for that. We're coming to the end of JobKeeper, ends on the 28th of March, claim it in April, no more payments. But we also have round 2 of the regional Queensland COVID-19 small business adaptation grants. So those grants are still available in regional Queensland. They're $10,000 and they're aimed at recovering from COVID. So it can go towards things like rent, adapting a business to change, for example, online, or a new revenue stream that you might be creating, and things like that. So I do encourage people, if you are suffering from COVID still in a small business sense, to apply. It's on the Queensland Government website or QRider website. And it is quite handy to that bit of boost as well from there. Yep. So, topic of the webinar is what happens next? What happens once JobKeeper stops? Businesses will start to receive less, and therefore, if you are having JobKeeper top-up payments at the moment, you'll be paying less to your employees if they're still on JobKeeper. The flip side of that is that even if your employees are being fully utilised at the moment and you are on JobKeeper, you really need to be careful of your bottom line if it's been artificially inflated by JobKeeper payments being received. We need to be careful that this may result in staffing changes and reviews for your businesses. So decreased revenue from lower consumer spending, although in Central Queensland consumer spending is up in most areas, there are certain circumstances, especially in retail, where consumer spending hasn't really recovered. We need to be really careful that JobKeeper hasn't been artificially inflating our business revenue, and to make sure that our revenue line is going to be what it is based on our expenses and our wages going forward. We've also noticed across our client base that repayment holidays from banks and lenders really helped out with the cash flow cycle and having a lot of cash available for our clients. I've had my couple of biggest clients, simply, it wasn't JobKeeper or cash flow boost, but it was purely the fact that bank repayments ceased for 6 months. And some of them didn't start that till June or July, so they're just coming off in January. That has really helped me out with cash flow and getting on top and getting some cash reserves. Whereas if you're in a growth phase of your business, that might not normally happen. So it does really emphasize the fact that we need to relook at our business model going forward from the 1st of April or from today, based on the fact that we don't have JobKeeper or cash flow boost. We don't have any ATO payment holidays or bank payment holidays or anything like that coming up as well. The ATOs today have been very nice. We haven't really seen too many phone calls on debt collection. We have heard, or we have seen essentially, that the ATO have been chasing up lodgements or unlodged activity statements and unlodged income tax returns to make sure that they know exactly what the debt level is of each client. But they have been very nice as far as unpaid debts up until a point. Everyone's talking at the moment about when is that time going to be when they are going to chase up these debts that are outstanding. So, what action should I take as a business owner? At Canars, we've always preached, make sure you know your numbers and they're up to date as much as they possibly can be. Too often we see clients or a group of clients that come to us and the numbers aren't up to the previous month end. You need to make sure that your figures are up to date as much as they possibly can be. So using cloud accounting packages with bank feeds, Xero is a great one. Also MyOb, if you are a MyOb user, make sure you have bank feeds to be able to make sure you can get the data in there quickly and code it quickly. But ensuring that your figures are as up to date as they possibly can be will give you the biggest chance to know exactly where your business is at going forward, considering that you have a decrease in revenue, either from cash flow boost ending, JobKeeper ending, or any other government grants are about to tail off as well. So watching cash flow, always ensure that you're up to date with the cash flow cycle of your business. How much do people owe you? How much do customers owe you money? How much do you owe to other suppliers as well? Whereabouts is your cash flow cycle at the moment in comparison to last year, last month, and where's it going to be? So you need to make sure you have an accurate representation of where you sit cash flow wise and how it's going to be going forward as well. There are some great tools in Xero and also Maya, some great reports as far as cash flow reports to make sure that your short-term cash flow is under control. And that's a very basic starting point, and then you can do budgeting from there onwards. But using your data to map out your future cash flow is very important so that you know exactly where you stand going forward. I can't stress that enough, is that cash flow from today onwards in all businesses is critical to the success of that business. Always make sure you're talking to your advisors. So we have tax estimate and tax planning time coming up in April, May, June. Always a good time to review your figures from July to March in the 2021 financial year to see where you're at and what changes can be made to ensure that your business really stays on top of both the cash flow cycle and a long-term profitability cycle as well. One thing that we are doing, if you are starting to come out of JobKeeper, or you have had some JobMaker credits come through and they're no longer going to come through, and your revenue still isn't at a point where it was 18 months ago, 24 months ago, pre-COVID, negotiate early. Very important to make sure you negotiate while you've got cash in the bank, while you're on the front foot, with appropriate cash flows going forward with your lenders and the ATO to make sure they are on top of what's happening in your business. I think I've done a record number of cash flows in the last 9 months with clients, either for new lending or for existing lending with holidays or restructuring, to exactly know where we're at with the business going forward. So negotiate with repayments with your lenders and banks, especially if your business has taken advantage of repayment holidays. So if you had 6 months worth of repayment holidays, what's going to happen is the bank is automatically going to adjust up your repayments. It might be a small amount, it might be a large amount, depending on the amount of the loan, but you need to make sure you're on top of that with your cash flow cycle. So if you've got a short loan term, i.e. 5 years on something like $500,000 or $600,000, you need to make sure you're aware of what the additional increase in the repayment will be. Also consider refinancing and taking advantage of lower interest rates and create stability of fixed rates. So at the moment, especially if you're looking to pay off loans over a very long period of time, I've had clients talking about fixed rates more than ever. Now, I don't advise whether you should fix a rate in or don't fix a rate in. It's purely based on your circumstances and your appetite for interest rate risk. What I think about it gets some advice. Every situation is different. I had a client who just bought a property. They're not going to pay off their debt for another 20 years. I said, look, it's probably time to think about fixing some of it, the part that you won't pay back in a certain period of time, just to give you some cash flow stability in the long term. Refinancing loans is always a good way of consolidating debt into a lower interest rate environment or dragging out your repayment period. We have done a fair bit of restructuring for clients in the last sort of 3 or 4 months as well. Business processes. So COVID, especially at the start of COVID, when business was starting to shut down, there was a big focus on reviewing processes and how can we do with less and what's our business going to look like. Unfortunately, or fortunately, fortunately from a finance point of view, but unfortunately from a process point of view, in Rocky, business conditions piked back up very quickly. And what that meant was that a lot of our clients weren't able to essentially look at their processes from the ground up because they immediately got busy again. But what we need to look at is your business processes to see how can you use your skills better and your knowledge to build your wealth, grow profits, and maximize your cash flow. So what I'm saying here is, are you making the best of what your time is? And should you be delegating or ensuring there's enough capacity in your business for it to grow again once COVID's finished. And when you do create the processes or the capacity or delegate, are the processes there enough to ensure that it is effective and efficient and profitable as it possibly can be? So it's quite important to review your processes at this point in time, especially things we're 9 months into the year. It's great to take stock and go, okay, this is where we're at as a business, and this is how we're going to move forward. You know your business best, and make sure you're making the most of these opportunities. So always ensure that you go back and look at your business from the ground up and look at what efficiencies are within your business before you go looking for other clients or the revenue streams or anything like that. Make the most of what you've got and then branch out from there. Building a buffer. We've had, and I saw a stat again today, there is a record amount of cash holdings for businesses in Australia at the moment. So what we've seen across time, and the economists will also tell us this, is that businesses have really started to grow a bit of a cash buffer because everybody knows that there is no more stimulus from here onwards, unless you're in the tourism industry, essentially. But a lot of clients are really basing themselves on the fact that there is no more stimulus from now onwards, and we need to make sure we have enough of a buffer if there are any shutdowns or snap lockdowns in capital cities, etc., etc. Luckily, in Rockhampton and Central Queensland, we've been very immune from this, but nationwide, a lot of businesses are still quite concerned about losing a week's trade from a snap lockdown, i.e. if you're a pub or a motel or anything like that. And it is something that a lot of our businesses do need to be quite concerned about, in that you will have cancelled bookings if there is a snap lockdown in Brisbane or Sydney, etc., etc. So make sure you're building a bit of a cash buffer and you're not spending all this essentially inflated money by government stimulus is important going forward in the long term. So make sure you use your surplus cash flow to prop up those reserves, and you are building a nice cash buffer going forward. One thing that we are seeing with clients, and we have seen a little bit during COVID, is that if they don't have the ability to pay, there has been a propensity not to lodge tax returns for fear of the ATO knowing how much is actually owed. We have seen this a little bit, but it is vitally important that lodgements are lodged on time. Okay, you need to make sure you stay on top of your lodgements to avoid lodgement penalties, and also to make sure you're in good standing with the ATO if we do need to come to negotiate a payment plan with the ATO. From my point of view, I would much rather lodgements on time and negotiate a payment plan than having to go cap in hand at the ATO and say, we haven't lodged, we're about to lodge, can we get a payment plan? If we have good standing with our lodgements, this helps us out greatly with the longer term with the ATO. So superannuation, ensure that that's paid as much as it can be by the appropriate date. If you can't pay it, make sure you lodge a superannuation guarantee statement with the ATO. Ensuring that that's done makes your compliance up to date and makes it easy to deal with the ATO later on. But also your activity statements and income tax returns, keeping them up to date is vitally important as well. The other bit of advice I have is make sure you always keep informed of what little things are out there to assist your business going forward. So we have the government grant finder. I'll read out the link. So it's business.gov.au/grants-and-programs. That's quite important, because if you are in a specific industry, there might be grants available for you to help your business grow in these times, or to help your business survive if you're, for example, a tourism industry or so on. The JobMaker hiring credit. We haven't seen a lot of correspondence come through from employers about this. Now, that could essentially be because CQ has been quite immune to an unemployment spike. But if you are employing anybody that is JobMaker eligible or has been on Centrelink and up to 35 years old, it's important that you have a look with the assistance with the cost of hiring those additional employees as well. But the one thing that I can't stress enough is making sure you are on top of your numbers, on top of your business, making sure that your numbers are up to date and that you really are analyzing them month to month, week to week, noticing any decreases in revenue, increase in expenses, and making sure that your business is adaptable to any changes that might occur. Simply because if we can get it early and you can review it early, then you might be able to make structural adjustments with your business that can help you out going forward. Ensuring that this, ensuring that you are very regimented and very strict on having your numbers up to date is going to help you out in the longer term with your business, especially in these up and down times. If you're not from CQ, it's very important. From Brisbane, or if you're interstate with a lot more uncertainty, CQ has been very good so far, but we're unsure of what's going to happen in the future. Making sure that all of your figures are up to date is vitally important as well. And that's the end of my presentation. So Brent, do you have any questions from yourself about that at all, mate? Or any thoughts on what you're seeing in the environment as well?
No, I think it's a pretty good overview, mate. No, I just said just being on top of your numbers. And I suppose, as you said, just I think a lot of businesses, maybe not in central Queensland, but definitely like in the bigger places, were caught short a lot of the time, like with not running, I know, having buffers and that sort of thing. They only had a week's surplus flow of cash and stuff like that. So
yeah, it's really about making sure that you're on top of your business and your numbers as much as it ever can be, because at any point in time, there could be a dip, even if it's for a week or two. If you're in a cash-based industry, you receive the cash today, but you have creditors that occur from today that you have to pay like 30 days onwards. For example, a cafe, a restaurant, or anything that we go and pay cash for. You really need to make sure you have a buffer to be able to pay them if your business is shut for a week. And especially with JobKeeper closing, that's even more important than ever. That's for sure. Anyone on the line got any questions or comments? Or I'll stop sharing my screen. No? Would you like to wrap it up, Brent? Or
yeah, no, wrap it up, mate. Keep it short and sweet.
Yeah, no, very good. So thank you for everybody that's listening, either on the podcast and the recording, or Mark. And we've got one other person on the phone as well. So thank you for taking the time every day to listen to a bit of advice on how we can recover in our business from COVID and the, I guess, the changes in the cash flows and the grants that will occur. If you've got any questions or any feedback, please don't hesitate to email us. We will send a recording of this out the next couple of days as well. So for those of you who, or if you want to forward it on to anybody as well, you're more than welcome to do that. Please subscribe and like our podcast, 120 Years and Counting, by Brent and myself. This will be recorded on there as well. Apart from that, I wish you all the best in the next few months. We'll have a recording next month as well in our webinar, to be confirmed, I think, Brent. And we'll go from there. So thank you very much.